Morning traders, and welcome to this week's Forex Focus. I hope you've all had a good week in the markets and you managed to find some profits there. The markets were obviously more than volatile this week with quite a few opportunities out there, but I also understand if you decided to stay out of the markets because there were a lot of unknowns out there. But the vote is out, what's done is done, and now what we need to do as traders, we need to figure out the best place to put our money and where the best opportunities are in the markets. And in the Forex Focus, as always, we look ahead at the Forex markets for the week ahead to see where those opportunities are. Thinking about things this week, you might think that the most obvious of opportunities will be in the pound, will be in sterling, but actually my brother and I kind of think that that's going to be a little bit overdone. That's going to be not as predictable as you might think, and we think that the risk of contagion throughout Europe is probably the bigger risk, and hence we might see a lot more downside to the euro than you will in the pound. So without further ado, let's jump over to the charts and take a look at what we're looking at for next week's trading. So let's start off by looking at the Aussie New Zealand. Now, the Aussie New Zealand is one of the only pairs out there last week that weren't really affected by the whole Brexit vote or anything like that. And for that reason, it's quite appealing to us because it is setting up very nicely technically as well. If we zoom in here on the 4-hour chart, you'll see that ultimately it's been trending down for a while now. And it's come down to this area around here, around the 1.0414. Up until the 1.0550 type level around there, and it started to go sideways. But this isn't sort of a reversal pattern right now, if you like. What this is to us anyway is more sort of price acceptance. So the market's come down to this level. It's gone quite a long way in a relatively short period of time, and now it's just sort of moving sideways for a bit. And it's printed a very, very nice pattern for us. We like it when the markets sort of start to trend downwards and they give us nice harmonic price moves. You can see that even though this is sideways price action, it's not ugly sideways price action. So it is still quite harmonic, if you like. And we like it, as I said, where it starts to pull back to around the moving average, the 100 moving average, and then gives us an opportunity to go short. So we're very much interested in taking this short in the coming week. If it gets below this level, probably stop above the highs over here or track it behind the 100 moving average, really depending on where that is at the time of entry. But the Aussie New Zealand is probably one of our favorite trades going into next week. Then we go into the Euro pairs. Now, as I said just now, basically thinking about the whole Brexit vote and what that means for the financial markets, the obvious play, or the herd play, let's say, will be to go into the pound and start shorting the pound against absolutely everything. The problem with that is that there has been so much volatility, so you kind of need to wait for the pound to adjust a little bit. So that you can start to see, true technical setups. Yes, you could trade just fundamentally, but the truth is you'd have to have very, very wide stops. And we're not convinced that there is that much more downside to the pound than where it is right now. As I said during a video that we put out last week, if we just come across to the pound dollar right now, a lot of the investment bank reports were projecting the downside to around the 1.32 level. That's the lowest level since in the last 35 years. If we were to kind of go out here on let's say on a weekly chart even, you can see that there is nothing in and around this sort of level here. So we're going back there, whereas it's 2008, that was a low in 2008. And look at, even after the shock there, the way that it pulled back, it's now back at that level. And we think that the Bank of England are going to do a lot to sort of prop up the market. That's not to say that it won't go any lower than that right now. We just think that it won't be as clean a move as it could be. So you can find better opportunities in other pairs. And one of the key currencies that we think are really at risk, as I said, is the euro, because whilst the markets hate uncertainty, right? And whilst there is uncertainty in the UK right now, so we're not quite sure what's happening. You've seen petitions out there for a second referendum and all of that kind of good stuff. The euro, there is a definite risk out there. You've had France come out, Italy, the Netherlands have come out, and they've all started calling for their own referendum. So from that perspective, we think that weakness in the euro is going to be far more predictable and far more easier to trade than that of sterling, that of the pound. So as I said, it is at the lows of the past 35 years. That's not to say it can't go any lower, but we really truly believe that it's going to be a little bit of a fight taking this to the downside. So we obviously opt for the more high probability trades. When you're trying to, as a trader, what you're looking to do is you want to make money, right? You're not looking to be proven right every time. You want to make money. And therefore, even though we may have a view on where this is going to go, the easier trades are in the euro for the moment. Now, that may change in the weeks or months to come as more information comes out. But right now, where we are right now, we think that the better trade, as I said, is going to be in the euro pair. So the first one is the euro Aussie. So if we zoom out here, if you take a look here on the daily chart, you can see that the euro Aussie, if you look at this momentum here, it did climb up on Friday all the way up to sort of like 1.51398, but now it's closed all the way back down towards the lows there. Now, we're not suggesting for 1 minute that you immediately sell this, or we're going to immediately sell this come this evening when the market's open. But what we're saying is looking at that sort of momentum there, okay, looking at this picture of the lower highs, okay, along the road, and we haven't had the lower lows yet, but if this starts to crack, then we could definitely some significant downside pressure down towards this sort of area here. And even before then, looking at the momentum in the charts right here, we'd be more than happy to take a trade to take the markets down towards these lows, which will probably manifest themselves more on something like the 4-hour chart right here. So if the market comes down here, a little bit more downside, a nice pullback to around the moving average, where we'll then look for a shorting opportunity. If that can be around the area of the previous level of support that becomes resistance, even better. And we've got a very similar opportunity on the Euro New Zealand. As you can see here, the Euro New Zealand has broken this structure level there. It then came back, respected that structure level. It's now broken down. Quite a little bit of volatility on Friday there, which was to be expected. But if we can now start to get a pullback here, we think that the pressure on the euro is definitely going to push this even lower. So that's also one we're going to have our eyes on. And then finally, for this week, we're looking at the New Zealand CAD. Now, the New Zealand CAD, even though this isn't an uptrend here, what we're looking for here, in fact, is a break of this trend line and then an opportunity to trade this down towards these lows around here. So what we'll be looking for is the market to break beneath this trend line, then give it a bit of a retest, prove to us that it doesn't want to close back above as we had with this sort of price action here. But it wants to hold below this trend line. And then once we get sort of like a mini trend established to the downside here, we'll be selling this all day long with a view to be taking profits down around the 0.8630 level. Okay. So that wraps up this week's Forex Focus. I hope you enjoyed it. And remember, as always, this is for educational purposes only. We're not telling you what you need to go in, buy or sell or trade. This isn't investment advice in any way whatsoever. It's just simply us telling you what we're doing with our own accounts, showing you how we analyze the markets, hopefully in a bit sort of educate you and help you really take your trading on to the next level. As I said at the beginning, it might come as a surprise to a lot of you, but there weren't any sterling trades on the table there. And the reason for that, as I said, is there's been a lot of volatility in the markets. They are very extended right now. So we want to really see how this plays out over the coming weeks before we look to take any significant positions in there in sterling. We think that the risk in the Eurozone, so the other European nations, is far greater right now. With the calls for referendums in, I think it was France, Italy, the Netherlands. So we think that the euro is going to suffer as a result of that in the coming days and weeks. And as traders, what we're looking to do is we want to make money, right? So we're looking for the most obvious areas to be able to make money. And that right now We're in the pairs that we showed you during the Forex Focus. So that's how we're playing our book next week. If you have any questions, any queries, any comments, please feel free to post it beneath the video. Give us a thumbs up if you like this. And otherwise, happy trading. Have a great week ahead. And I look forward to speaking to you on next week's Forex Focus. Take care now.